5 a.m. in New York City. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Treasury's lower as the market looks to this afternoon's FOMC decision for answers on the health of the economy and committee consensus. President Trump is said to be starting the final phase of Fed chair interviews this week, pitting frontrunner Hassad against other contenders. Plus, SpaceX is said to be targeting an IPO next year and a valuation of $1.5 trillion. So let's get to those markets. 9 hours and counting. And honestly, the actual decision that we get is probably the least of it today. Traders will be parsing the language, the forward guidance, whatever Powell has to say, who might be the front runner for next year after this week. We have a lot to get through today. But again, futures treading water before today's FOMC decision. Obviously, we're very likely to get a 25 basis point cut, but how much will labour market weakness play into today's decision and the Fed's thinking going forward? Let's take a look at the bond market because we are seeing yields higher. We're up to 420 now on the 10-year yield, right back up to 481 on the 30-year yield and 361. I mean, yes, these have been tight ranges generally, right? But this is a good 15 basis points higher than just a few days ago. So it will be fascinating to see what we have to hear today. And then, of course, there are some more earnings. We have Oracle after the close today and Costco as well tomorrow. So let's get to some individual equity movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on how the energy race, at least when it comes to AI, is shaping up. GE Vernova really shocking markets, boosting its profit guidance, boosting its dividend, doubling what it's calling for its dividend, and also boosting its profit margins. GE Vernova up nearly 8% in pre-market trade. This is a company that's really benefited from the AI electrification trade. The shares were already one of the best performing in the S&P 500 this year, and the CEO was saying at the investor day yesterday that they're going to generate lots of cash and they're going to have the ability to now play offense. Let's move on to the restaurant space. The shares of Cracker Barrel are in the red this morning, down over 8%. The restaurant chain has now cut its outlook. It is still suffering from the rebranding of its logo that got criticism even from the U.S. president. The restaurant chain is aiming to cut costs and boost some marketing campaigns when it comes to its core customers. Lastly, let's check on Palantir. They have secured another government contract when it comes to defense. The U.S. Navy will be using Palantir services in order to adjust their supply chain to help their production of their submarines, which have been fraught with years of delays and overrunning on costs. So we're seeing shares of Palantir higher by 1.5% in the pre-market trade this morning. Bonnie?
All right, Valerie, thank you so much. Valerie Teitel there in London. And coming up this hour, we're going to count you down to that Federal Reserve decision with Robert Sockin of Citi. So futures steady then, yields a little higher ahead of that decision and the outlook for 2026. Let's bring in Bloomberg Markets Today co-editor Morwenna Coniam. Morwenna, what will traders be most focused on today, do you think?
Well, I think the Fed is obviously the key event for today, and it's widely still expected that we will see an interest rate reduction. That's the third consecutive one from the Federal Reserve, but that could be it. What we've really been seeing in recent days is the paring back of those bets on further cuts, and that is being reflected in the bond market today. And in fact, this is a global situation. We're also seeing no more rate cuts really priced in from the ECB, and also actually a paring back on rate cut bets from the Bank of England next year as well. So whilst we're seeing this current round of easing still playing out, there is a sense that perhaps this is coming to an end and markets are adjusting accordingly.
So it's likely there'll be a huge focus on dissent. Who dissents, how many people dissent, and what their reasons for dissenting are, Morwenna. I mean, if the labour market is looking a little weaker in the United States and we're likely to get a more, dovish Fed chair next year at some point, wouldn't the market be right to price in more, not fewer cuts next year, at least in the United States?
Well, that would seem to be the case, and that was perhaps how it had been anticipated to be, up until about a week ago. But what we're seeing is potentially higher inflation coming through, and that's something we're also seeing in Australia and it being mentioned in Europe as well. So the concerns actually about an overheating, inflationary concerns are having to be balanced against that weakening labour market, which I think is really why there is likely to be a lot of dissent, and it depends where people see the biggest risk.
It may happen that we get repricing again after today, but particularly next week, Morwenna, we're going to get a whole batch of data, and it's going to be the freshest data that we've had in a while. Will that affect traders, obviously, going into the last few sessions of the trading year?
Yeah, I think absolutely, and that is one of the reasons why there's so much uncertainty actually at the path currently, because we have had that real dearth of US data. Like you said, coming up next week, we're actually going to get some which is perhaps a bit more useful for making those decisions. So I would expect to see the market paying a lot of attention, to those reports coming out next week as we go into the end of the year at a time when perhaps normally things would be a little bit more settled.
Yep, the 16th and the 18th. All right, that's what we'll be focused on after today, of course. Morwenna Iconium, thank you so much. Last night in Pennsylvania, President Trump rallied supporters calling for a new era at the Federal Reserve.
We're checking this. You know, we have a bad head of the Fed. Bad. We're going to be making a change. Fortunately, this guy's out. But we have 4 members appointed by Sleepy Joe Biden.
The highly anticipated change is his pick for the next Fed chair. Frontrunner Kevin Hassett weighing in on the upcoming rate decision as well on Fox News.
Jay Powell has done the right thing, which is he's taken the far left people of the board and he's coalesced them around, it looks like, a rate cut, which is the right move right now. I might like a bigger one, but I think that that's what the Fed chair has to do. Don't forget, you're managing a committee. And so getting rates down right now, it's a good thing. There's a lot more room to go.
Joining us now from Washington is Kate Ackley of Bloomberg Government. So President Trump also making some comments on tariffs, Kate, at that rally in Pennsylvania last night. Let's just take a listen.
What's amazing, it's the smart people understand it. Other people are starting to learn, but the smart people really understand it.
I mean, is this a good way to approach voters that are concerned with affordability? You know, telling them basically, if you don't get it, you're not smart enough, so you better pretend you get it or at least get it, and that way you'll be smart?
Well, this is part of his, new kind of road show. He started doing more domestic travel again with this trip to Pennsylvania and trying to, address voters' concerns about the high cost of goods and services, the high cost of living. That's something that Democrats in Congress and on the campaign trail are increasingly talking about. So he's trying to build support for the tariff agenda and saying that it's, brought in revenue that allowed him to sort of authorize a bailout, if you will, for farmers who have been strained by the tariffs. So we'll see how this resonates to voters, as you said. But the president has long been a big supporter of tariffs and really is dug in on that.
And of course, as we heard earlier, his frontrunner to be Fed chair says that he would like an interest rate increase and that maybe if it were up to him, he'd do more than 25 basis points, or at least he'd like for that to happen. What do we know about this week in terms of interviews and next week as well?
Well, I mean, you had Kevin Hassett there, the clip earlier. He is seen as the front runner. Bloomberg has been reporting. There are some other people in the mix, also, Fed governors. But I think this seems to be, as of right now, that Hassett would be it's his job to lose, if you will.
Yeah, exactly. So separately, we're hearing now that perhaps Scott Bessent was talking with the UBS chairman about moving UBS to the United States, Colin Kelleher, right? Senator Elizabeth Warren has now requested that those details be divulged. What do we know about this particular story, which is just emerging now?
Well, what Senator Warren is reportedly asking about is she wants, details about any kind of conversations, and has Secretary Bessent or others sort of promised favorable regulatory treatment? Is this, I don't think the term was in there, but what she was getting at is there some sort of a quid pro quo here? Is Secretary Bessent offering favorable treatment in some way for a relocation of headquarters to the United States?
All right, Kate, thank you so much. We'll keep our eye on all of these stories. That's Kate Ackley of Bloomberg Government in Washington. and history potentially in the making. Elon Musk's led SpaceX is moving ahead with plans for an IPO next year. It could be the biggest of all time. Bloomberg learns it aims to raise significantly more than $30 billion, with the company setting a valuation of about $1.5 trillion. Saudi Aramco, of course, currently the biggest IPO of all time. Bloomberg's aerospace reporter Kate Duffy joins us now for more. So will this be an easy path to an IPO? It's supposed to happen towards the end of next year, potentially, Kate.
Yeah, potentially. I mean, SpaceX is the company on everyone's lips in the space sector at the moment. It can reliably and frequently deliver humans and satellites into orbit, and that's what everybody's comparing themselves to at the moment. So we've heard that potentially with this funding, this could go towards some space-based data centers that SpaceX is planning to build up in orbit. And obviously, this clearly points to the plans for the company to grow. And this is something that investors will be really focused on in the coming year or so. It could happen in 2026, that it could also slip into 27. So it's still yet to be seen as to how this could accurately develop.
What about pricing on it, Kate? I mean, obviously we have, the effort to get to $1.5 trillion. Is that just because that would make it the biggest IPO in the world, or are bankers already working on this and suggesting that this is what SpaceX is worth?
Well, it's one of the world's most valuable companies at the moment. So obviously you have the progression that they're making with their Starship launch vehicle. This is the rocket that intends to take humans to the moon and beyond, eventually to Mars. They also have their space-based satellite internet service called Starlink, which is currently creating lots of deals with major airlines around the world, such as British Airways, Virgin Atlantic, and loads of American airlines as well. And you also have the Falcon 9 rocket, and that is the most reliable service they have at the moment, and that is the rocket that is delivering frequently satellites into orbit for themselves, for the Starlink service, but also for other companies as well, such as BAE Systems that we've seen, a defence company listed here in London.
Kate, I mean, if this does indeed go ahead, will Elon Musk's role change in any way? Will his compensation change? What will we hear?
That's yet to be seen. That still remains very unclear as to what his role will be. But what is clear is that this will change the investment landscape for the space sector in the US. Obviously, space is a huge part of the economy in the US. The US puts a lot of money towards it in comparison to other regions around the world. And obviously, there is this huge competition with China as well. Who's the first person or the first country to get to the moon? And so this is what the US is really focused on at the moment. But as you say, it is all down to the timing. This IPO could happen next year. It could happen in 2027. There's still things that are yet to be cleared up.
All right, Kate, thank you so much for keeping your eye on all of these details for us. That's Kate Duffy there. Now on to other top stories trending on the terminal this morning. ECB Governing Council member Gerimantas Simkus said interest rates do not need to be lowered further after economic activity and inflation both turned out stronger than expected. Investors now see a 50% probability of a rate hike next year, but Simkus and other policymakers say it's too soon to think about rate hikes. Aegon's shares dropped after it unveiled disappointing payouts, overshadowing a confirmation it will move its headquarters to the US. The company will buy back $466 million of its own shares next year. The Dutch insurer, which will rename itself Transamerica, intends to complete the move over the coming 2 years. And Nintendo's shares slid to their lowest since May, weighed down by concerns that the surging price of components will erode profits. Shares of the game maker have declined in 7 out of 8 trading days in December, losing roughly $14 billion in market value. Coming up, we'll bring you our exclusive conversation with HSBC CEO George El-Hedary on the bank's integration of generative AI. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Wall Street's AI adoption will potentially drive a hiring boom, at least initially. In the latest Bloomberg Intelligence survey, 2/3 of financial services firms responded that their staff numbers will likely increase as they adopt AI. Bloomberg's Francine Lacroix spoke exclusively with HSBC CEO George El-Hedary on the bank's integration of generative AI and how aspiring financial professionals should prepare.
We now rolled to 170,000 of our colleagues internal productivity tools that can materially improve their capabilities of reading documents, reading emails, writing documents, emails, querying, challenging.
The dream.
170,000 of our employees. I mean, soon all the way to the 200,000+ employees. But for the moment that's in the rollout phase, we've already reached 170,000. Of course, I will be monitoring usage. I'll be monitoring super usage. Those will be the most, kind of influencing among their colleagues to drive the utilization. But utilization is not optional, because that's how people remain very relevant in the future workforce 5 years down the road. But we're using Gen AI in wealth, we're using Gen AI in markets, we're using Gen AI in contact centers, we're using Gen AI, of course, in technology. Now 30,000 of our technologists, engineers, are enabled with Gen AI. The speed at which we're able to patch for, say, code weaknesses or kind of vulnerabilities is 10 times faster already now with coding assistance than it was the case last year. 10 times. And we're not talking
in 12 months.
In 12 months. We're not talking some productivity in 5 years. We're talking productivity already here. We're already 10 times faster at identifying and patching some of these vulnerabilities in our code. This is hugely transformational. So you can imagine how important it is. Now I go back to the first part of your question, Francine, is what are the skills that are needed for banks? I would say there is no one particular skill that's going to be critical, but it is going to be the ability to learn. Because you can come in a bank coming from an engineering background, from a technology background, from an accounting background, from a finance and economics background. You can even come into a bank somewhat from a different field than directly related to banking. But once you're in the bank, your career, the customer's expectation are such that you're going to have to continuously learn. And if you think you know it all, then there is no place for those, in an evolving landscape. It's very important to continuously be ready to learn and put in the hours and the effort to learn something new, a new skill, an additional skill. Today, the most important learning capability is how to best embrace Gen AI and innovation in general.
HSBC CEO Georges El-Hedary speaking there with Bloomberg as part of the new Leaders with Francine Lacroix podcast series airing next year. Coming up, Venezuela's Maria Corina Machado will not travel to Oslo to accept the Nobel Peace Prize in person. A look at what's making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Washington Post is reporting a House panel plans to end its probe into the boat strike that killed 2 survivors of an attack on their alleged drug smuggling vessel. The Republican chairman of the House Armed Services Committee said he'd received all the information he needed. The Post says Democrats, questioning the legality of the killings, are calling for the release of more evidence, including unedited video of the strikes. Next up, the Financial Times is reporting EU countries are trying to fast-track a decision to indefinitely immobilize up to 210 billion euros of Russian sovereign assets. The FT says the hurried effort to pass legislation aims to bypass a potential veto by Hungary's Viktor Orban. The move aims to protect Brussels' leverage in peace talks over the war in Ukraine. And finally, on the Wall Street Journal, Venezuela's opposition leader, Maria Corina Machado, will not collect her Nobel Peace Prize in person in today's ceremony. Instead, her daughter will travel to Oslo on her behalf. The Journal says Machado has spent most of the past year in hiding to avoid arrest. All right, it is FOMC day. Let's take a look at markets. So cross-asset, we have futures really just steady, unchanged, right? We're not that far off records, and we just had fractional moves in yesterday's session. waiting not just for the decision, which is very likely to be a 25 basis point cut, but for the amount of dissents, who dissents, why they dissent, what's the outlook for the labour market, what's the outlook for inflation, and does the Federal Reserve think the fog has lifted at all? Has anything really changed since the last meeting? The dollar index also doing nothing. I did want to point to silver, though. This is a slightly separate story. Lots of reasons why silver is higher again today. It has outperformed gold by 50% this year. Gold, by the way, holding steady. So let's take a look at the bond universe, because that's really telling us the narrative of the Federal Reserve and central banks. We're up another 2 basis points over yesterday's session at the short end and the long end of the curve, 482 there, and we're right back up to 420.74. What is that telling us exactly? Is it telling us that we're going to see a more dovish Fed? We'll ask our next guest, because we're going to be drumbeating to the Fed's last rate decision of the year. Citi's Robert Sockin joins us next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Treasury is lower as the markets look to this afternoon's FOMC decision for answers on the health of the economy and on committee consensus. President Trump is said to be starting the final phase of his Fed chair interviews this week. He's pitting frontrunner Kevin Hassett against other contenders. Plus, SpaceX said to be targeting an IPO next year and a valuation of $1.5 trillion. So let's take a look at those markets then. We have futures fractionally lower, just very small declines here as we await the decision, but also the news conference in particular, what the Fed chair says about the labour market. And don't forget those weaker JOLTS data weighing a little bit on this market as well. You see it in the bond space too, with yields definitely higher, 362, 420 and 482, so higher across the curve, and we're up about 15 basis points from just maybe a week and a half ago. We obviously have a lot to consider, but it's just about 8.5 hours now before we get that particular decision. So in the metal space, spot gold pretty steady, and silver is continuing to print fresh records. Bitcoin as well, it did push past $93,000. It's just below that right now, so a little bit going on in this market. Let's get to some individual movers now. With that, Valerie Teitel is in London. Valerie.
Good morning, Bonnie. Let's start with a check on GE Vernova. They had some very bullish things to say at their investor day yesterday, and the shares are up near 7.5% in pre-market. They have boosted their buybacks, doubled their dividend, and increased their profit margin guidance. This is all in the back of the success around the AI trade. The electrification of the economy means that the products that GE makes are in high demand. We also heard the CEO saying that they are generating a lot of cash, and then it's time to play offense. Those bullish comments from the GE CEO are seeing GE Vernova very much outperform in the U.S. pre-market this morning. To go on to the restaurant space, Cracker Barrel is still suffering from a pullback in sales after the logo mishap earlier this year that even attracted the criticism of President Donald Trump. So Cracker Barrel on a back foot, down nearly 8% in pre-market trade. The restaurant chain has said that they will be pulling back on some of their cost-cutting measures, but they want to target their core consumer with some new marketing campaigns. Lastly, let's touch on Palantir. They have secured a new contract with the U.S. Navy in order to help the U.S. Navy in its supply chains around its submarines. Palantir shares are just up just a touch over 1%. The U.S. Navy has been struggling with years of cost overruns and delays to its new class of submarines, and Palantir contract hoping to fix some of those issues. Vonnie?
Valerie, thank you so much. That is Valerie Teitel there in London. Citi's Robert Sockin anticipating further cuts in January and March, in addition to that quarter-point cut, which is widely expected today, with risks favouring even more cuts next year. He writes this: with nearly half of Fed officials sceptical that the cut being delivered at this meeting is appropriate, Powell will be reluctant to signal further rate cuts to preserve some degree of consensus across the committee. I'm pleased to say Robert joins us now. He's senior global economist at Citi. Robert, thank you so much for joining.
Thank you.
There does seem to be this idea that Powell kind of has to go today because the market is anticipating it, and then there's going to be more rate cuts next year, never mind the health of the economy, but simply because people are dissenting in favour of further cuts, and we may get a very dovish Fed chair.
I think in terms of this meeting, given that we have a lot of risks around the economy and not a lot of new data in recent months, given the government shutdown and delays there, I think the best course of action, the easiest course of action, is to follow the path that you were planning on before the government shutdown, which was to ease further at this meeting. And I think you've seen market pricing move that way. I think next year, as you highlighted, our team's base case is that we get a few more cuts early in the year. But that's going to depend on how that data eventually comes in, how the data that's been delayed comes in, how data early next year comes in. And there's a lot of question marks around that. I think you see that in markets as well. Markets are pricing more cuts from the Fed next year, but the timing is very uncertain. And given how resilient growth has been up to this point, whether we get those cuts is uncertain as well.
Why would the Fed chair decide that he was going to go with his feelings about the economy before the shutdown? We haven't had any concrete evidence since, except for some anecdotal evidence from the beige books and, maybe the JOLTS data, but that's really showing, low hiring, low firing economy. It's not literally showing serious weakness in the labor market. And he did say at the last meeting, we're in a fog, we should slow down. Yeah, absolutely. I think a fog is a good way to describe the environment we're in. And if I had to pick a data point that is really pushing the committee to continue easing at this meeting, it's the unemployment rate, because there's a lot of changes in the labor market. Which unemployment rate? We don't have any.
Well, in the most recent data that we had, it has been trending up. It is still relatively low, but around 4.4%. That's notably higher than it was at the beginning of the year. And historically, when the unemployment rate starts to move up, if it moves up by a certain amount, it tends to keep going, and that's the fear that's going to keep them, I think, easing at the meeting. Now, not everyone agrees with that. I mean, we're going to have probably a fair amount of dissent at the meeting. We're seeing dissent publicly over the last few months. So it's by no means an easy call. But if I had to pick something, it's the fact that the unemployment rate has been rising that's giving them cause for concern.
Sure, and they have said that, in the past that they were more focused on, well, they've indicated that they were more focused on the labor market. But will the balance of their focus be a little different at this meeting, given that we really, haven't had that much new information on the labor market, and they can't really project from, last September's data? Yeah, and that's the challenge. And I think Chair Powell is going to have to find some way to pull all of this message together at the press conference. And so I think if we get easing today, I'm not expecting the chairman to really lean in to additional cuts going forward. I think the way that you kind of square that is you say, yes, we are in a fog. We need a lot more data. There's still downside risk to the labor market, but inflation's also elevated. We have to see what comes in. So I think he could be hawkish at the press conference. Sure. Is there any impetus for him at all to not cut, given that everyone is expecting that the next Fed chair is going to cut more than potentially what they would do? Yeah, I think on the one hand, I think the data and where he would be with that data supports the view for a cut. On the other hand, yes, we are going to get another Fed chair next year. Most market participants would say it's probably someone that leans more dovish than Chair Powell and the center of the committee does at the moment. I would agree with that. But there's also a lot of uncertainty about who that candidate is going to be and really how much they're going to be able to shape policy at the Fed, given that decisions are done by committee within the FOMC. So I do think that they're going to be thinking about, well, what has the data been telling us up to this point? And at the end of the day, as you noted, I think push comes to shove, it's really a committee that's going to be more focused on the downside risk to the labor market than on where inflation is at the moment. But as noted, there's a lot of division. No chance then of an insurance non-cut? I can't see it. And, I know if we go back to the last meeting, the language was a bit more hawkish than many were expecting. It sounded like they were weighing this more closely. But as you noted, market pricing has really moved to point to a cut today. I think they'd be loath to go against that without really strong reasons. And again, I think the way the data have moved, yes, the economy's been resilient, but there's enough additional weakening in the labor market that I think it supports another cut at this meeting. You said upside risks to inflation are limited. Yes. Even with the fact that we don't know what the impact of tariffs are fully yet, some tariffs haven't even been placed on goods. There's more talk of new tariffs on individual goods. And you're also looking for 3 cuts by March. That's an awful lot of easing into an economy that's experiencing tariff. Yeah, exactly. And this is the big risk. We don't know the full effect of tariffs. We're seeing tariffs
push up goods prices. Goods prices in the U.S., the inflation there has diverged from goods inflation in the rest of the world. It's been more muted than we would have thought, but you are seeing in the data. And there's a lot of uncertainty, as you said, going into next year. Now, if you go back relative to a few months ago, our inflation forecasts are lower because you're getting offsets in some other areas. So in some services inflation, you've seen more moderation than we would have had. You net all of it out, it's core inflation somewhere near 3%, end of this year, early next year. But I do think the upside risk is capped in terms of that on the one hand, you have that services disinflation. On the other hand, I think as the administration pivots its focus to affordability, there's the potential you could get even some tariff relief next year, which would limit some of that upside. So I do think a lot of risk there as well, but I see more downside risk to the labor market than I do see upside risk to inflation.
Total of 175 basis points of easing since September of last year. What has that done for the economy? Has it propped up the labour market to the extent that it has been propped up?
Well, this is always the big debate, is how much effect does central bank easing have in this type of environment? I think net, it's helpful in the sense that growth would have been softer if we did not have those cuts. But it has been fairly limited, and you've seen that reflected in the labor market, that you see a continued deterioration through the year. I think that points to other factors aside from interest rates that's driving those changes. So net, a positive. But I think another important point is most Fed officials, I think, would argue that despite the easing that we've seen, interest rates are still above neutral. And so if they cut further, they're not bringing it into outright accommodative territory, but they're just bringing it closer to what they think is a more neutral policy rate.
Well, we shall see. In 9 hours, we'll know an awful lot more. Our thanks for his visit in studio to Robert Sockin of Citi. Now to other top stories trending on the terminal this morning. SpaceX said to be moving ahead with plans for an IPO next year, potentially the biggest in history. Sources say it aims to raise more than $30 billion. The company is targeting a valuation of about $1.5 trillion. SpaceX's management and advisors are said to be pursuing a listing as soon as mid to late 2026. The US is proposing to require social media checks on visa-free foreign visitors entering the country. The mandate would apply to travellers from about 40 countries. They include Australia, Germany, Japan and the United Kingdom. The proposal was given a 60-day notice with requests for comment. And China is said to be considering whether to allow its tech companies to buy NVIDIA's H200 chips. The Information is reporting that the country convened an emergency meeting with tech giants, including Alibaba and Tencent, on Wednesday to discuss the matter. It all comes after President Trump's decision to permit their export to the country. Coming up, President Trump back on the road. More on his rally in Pennsylvania last night as he seeks to reset perceptions about the economy. That's next. This is Bloomberg.
What's amazing, it's the smart people understand it. Other people are starting to learn, but the smart people really understand it.
President Trump back on the road, addressing supporters in Pennsylvania on his tariff policies. Back with us in Washington is Kate Ackley of Bloomberg Government. So what was he trying to do there, Kate? Change people's perceptions of themselves as smart human beings, or change perceptions of his economic policies?
This is really a kickoff of the midterm campaigns, and this is the president being sort of a campaigner in chief, if you will, heading to, the battleground state of Pennsylvania. Obviously, he's not on the ballot next year in 2026, but Republicans are increasingly concerned about their ability to hold the House of Representatives. And of course, they've got key Senate races in battleground states that they're also, looking at. And this is the president coming in and trying to assure voters that he and Republicans care about rising cost of living and, other sort of bread and butter issues, economic issues.
Right, and he was trying to convince voters that tariffs enabled him to pay support to farmers and also brought manufacturing back to the United States. But I'm not sure how many manufacturing bases have actually provided jobs yet. Are voters aware that there might be a false premise or two in here?
I think voters are looking at what their own costs are, costs of groceries, costs of other things that they do, on a sort of daily or weekly basis. So, he's got to sell them on that Republicans and the administration are doing something to combat, people's perception that costs are high. Tariffs, we've seen a lot of pushback from the business community, retailers saying that, they're concerned about tariffs and that those costs are going to potentially trickle down more to, everyday people.
So the other notable thing that happened yesterday in terms of next year's midterms is that the Miami mayoral race was a loss for President Trump for his endorsed candidate, a win for the Democrats. And, President Trump had flipped that county, had flipped Miami-Dade when he won this time round. How predictive, if at all, is this of anything for next year?
Well, of course, time will tell. But you saw immediately after that election was called, Democrats leader in the House, Hakeem Jeffries of New York, saying, next Democrats will be coming for Republicans who hold House seats in South Florida. So they're saying, they're trying to gain some momentum from this, just like Democrats did in, the New Jersey and Virginia elections in November. So, these are data points. It's almost a year away. The midterm elections are almost a year away, but everybody is looking for data points. And this is certainly one that the Democrats are going to be using to say that they have momentum on their side heading into the midterms.
All right, Kate, we have to leave it there, but thank you so much. Kate Ackley of Bloomberg Government in Washington. Turning to tech now, a new survey by Bloomberg Intelligence reveals C-suites across industries are experiencing shortages in AI infrastructure, acting as roadblocks to AI adoption. Matt Bloxham from Bloomberg Intelligence, who worked on the report, joins us now. Matt, what were the main findings?
Yeah, so this was the big survey, over 600 C-suite execs involved. As you kind of said there, one of the key roadblocks that people see is the lack of AI infrastructure. I think short term, we've seen that play out with the likes of Microsoft struggling to bring on enough capacity to meet demand. I think beyond that, no big surprise that every board is looking intensely at AI. More than 80% of respondents said it's a top 3 priority for their strategy. I think when you look below that, what's quite interesting is where the emphasis is, and that essentially that the kind of top objective for AI implementation is about productivity. And the second most important objective is sales growth. Looking at jobs is kind of further down the kind of report card.
So are CEOs reporting any kind of improvement in profitability or margins or even efficiencies yet, or is this still just a hope and a prayer?
I think it's an ambition, maybe hopefully more than a hope and a prayer, that on over a 3-year view that the respondents are expecting something like on average a 7% sales growth and a 7% profit growth coming from AI. And I said that's kind of more about operational efficiency. One of the big surprises is that in the near term, most of the respondents, over 60% of them, anticipate over the next 3 years that they'll actually increase jobs as a result of AI, not cut them, on average expecting a 4% gain in jobs. So there's investment in the near term to release what they hope is kind of midterm revenue and profit gains from this technology transition.
Matt, what does the report tell us about what sectors are seeing the biggest gains from AI?
Yeah, I think there's some interesting stories there, I think, and it varies a lot from sector to sector. I think pharma, definitely one where we're seeing lots of opportunity to improve drug development. Obviously, the software and services industry, optimistic about the sales opportunities. They topped the outlook in terms of sales and profit growth. And even other sectors like consumer and media see opportunities more on the cost side as they can overhaul the way they deliver products and certainly in media kind of deliver content. It's obviously kind of a big topic right now, given everything going on with Netflix, Paramount and Warner Brothers.
Matt, did anybody, whether it's in the survey or even just anecdotally and in some of the responses, suggest that AI wasn't really doing much for them at all, that yes, they were going to try and wire it into their systems because that's just what everybody is doing right now, but they don't anticipate that it's actually going to, improve efficiencies or anything like that?
No, I mean, I think overall the results show a broad level of optimism about the opportunities from it. I think one of the issues that did come up, though, when we asked about roadblocks and concerns was the magnitude of investment costs and the uncertainty around return on investment. So I think that's going to be a big theme for corporates in 2026, is moving AI projects from pilot to scaling, and what the return on investment really is and how long this investment is going to take to pay back. And I think that's crucial for the outlook beyond 2026 for the likes of OpenAI and whether this kind of $1 trillion plus investment is going to pay off.
Matt, why don't we have answers to some of those questions yet? I mean, is it that hard to model out what an AI will do for a company?
I think it is. And obviously, when there's lots of different ways that you can deploy AI in a company. Some are kind of fairly obvious, like kind of customer call centers. I think that's a kind of fairly straightforward payoff. I think when you look, lots of companies are rolling out Microsoft Copilot into their Office suites. I think the broad scale benefits of those are less clear, and how much productivity benefit does that deliver to your average employee? What does that then translate to in terms of whether you can cut headcount, or are you seeing incremental revenue opportunity and just kind of general better productivity? I think that's a very complex set of issues for CFOs to work out, and the cost dynamic of how much it costs to implement AI is evolving all the time too, and new models are coming out every few weeks. And so I think there's a lot of moving parts right now, and I think we need some time still for it to kind of stabilise and for the kind of benefits to really become more apparent across the different back office functions in particular.
To paraphrase somebody else relevant today, we are operating in fog, Matt, and maybe we should slow down a little bit. That is Matt Bloxham of Bloomberg Intelligence. Coming up, that Fed decision front and centre. We'll get up and set you up for your trading day next. This is Bloomberg. Now a look at what's ahead today, or what else is ahead today, I should say. The Bank of Canada rate decision is coming at 9:45 Eastern, and of course, it's the Fed's turn at 2 p.m, followed by Chair Powell's press conference at 2:30. We also get Oracle and Adobe earnings after the market close. Let's take a look at some pre-market movers now. Palantir is higher. The US Navy is partnering with the firm to speed up some submarine production. GE Vernova, an obvious beneficiary from AI, and that's because of power. It boosted its buyback to $10 billion and is doubling its dividend. Cracker Barrel expects sales to fall faster than it previously forecast, and that stock is tanking. This is the macro picture before your Fed decision. Futures going nowhere. US dollar going nowhere. The 2-year yield higher in the last few sessions. That's it for Bloomberg Brief. Surveillance continues the conversation.